welcome. It's nice having you today. You know, this is usually a time that we really broaden out and discuss a lot of different aspects from all of the different risks and economic activities that are going on to your portfolio and changes that we're seeing. And then we really talk about some advanced planning elements and wrap up with what we call the stress test and a second opinion. So that's usually what we get to, but today is going to be a little different. I really want to focus on just the risks that are out there. Now, for the last couple of weeks, I have been talking about the fact that we are in this, what we call lead to scenario, where we have the economic growth starting to grow, as well as the fact we have some inflation starting to pick up as well. Now, this is actually a very good environment on an economic front to be in, when we have a little bit of growth of inflation plus growth of our economy. Now, the world's economy is coming into this, and we are really seeing a broadening around the world of growth that's starting to happen. So, great aspects. However, is that we're starting to lose momentum in the stock market, but we couple that with some of the elements that have happened last week, especially on last Thursday, where we had really the aspects of Iran start to come out against Israel. Now, what they were saying is that basically that they were going to attack Israel, and you saw this massive sell-off in the stock market because of that. So up until this point in time, it's really been what we call the flows that have been dictating where the stock market has been going. So what that means is that all of the different money that's coming into the system is really propping up the overall stock market. But when we have unexpected events, ones that could actually alter the changes of the not only the world but the wars that are happening, that's when this is an unexpected risk that comes into play. So what we saw was a sell-off in the markets. Now here's the thing, it was a very orderly sell-off. And I was listening to a general speak on Friday morning talking about all of this, and basically what's happening is we can't discount that Iran will attack Israel. But here's the different elements of the story that he was discussing. Basically what's going on is we're calling this a war within a broader war. So a war within a war. And when we talk about things that way, we can see some of the things that are starting to happen. Now, I've said before that when we are in, call it a lead 3 or lead 4, so lead 3 scenarios where we have really no economic growth but heightened inflation, or lead 4 is where we do not have economic growth and we have either a disinflation or a deflation starting to happen, that is a recipe for, well, disasters for the economy. And up to this point, Iran has been in a lead 4 and they're coming into a lead 3 stage for their economy. So either way, their economy has not been doing well. And that is one of the absolute very particular times they see wars start to crop up. When economies are not doing well, the leaders, especially of some of these obscure or noteworthy, depends on how you look at it, countries, they start to think that war may be the answer because that is actually producing money for them. So when it comes to that, then you can start to understand why Iran is not only mad at Israel for some of the things that they're doing, but the ways that they want to possibly even broaden their own economy. Couple that with the fact that then they can be bringing in the US and bringing in other entities along the way to really kind of make this a regional war, you can see their intentions. Now, whether that happens or not is going to be something that we ultimately will pray against, and we're going to have to be witnessing kind of in real time. But when it comes to the markets, most likely is to the point that unless that actually happens, it may be a one-off event. And when we start to see what we call the volatility, or all of the different under the surface chemistry of the stock market pick up, that it right now has only been short term and it's not broadening out into more of a long-term risk. So that continues our belief that yes, in the short term, maybe in the next week or two, we've lost momentum of the stock market, meaning it's going to be harder for us to continue to increase and improve the markets. However, in the long run, over the course of this year, there is incredible opportunities mathematically, as of today, for our stock market and our economy to continue to grow. Now again, this is not necessarily something that absolutely will happen, predictions or any otherwise, but this is saying the elements are there. And when we take a look at, like I've highlighted before, China, Asia, and many other countries around the world that are coming out of this industrial and manufacturing recession that they've been in for the last 2 years, now you're starting to see that there are many opportunities around the world for growth. So yes, the risk is still there. Yes, we still have war going on. Yes, we still have many different elements that we really should be wary of. But when we look at diversification and the ways that that works within your portfolio, now we can start to see that items like last Thursday's sell-off with news that was not something that we anticipated, so unanticipated news, now we can start to say that yes, we can move past that. Yes, we can start to look towards the future. Right now we have inflation, so actually one of the best hedges are some different elements of commodities, and right now, precious metals. Now that not always has been the case. Generally, when we come into this environment here where we have a lead to, well, it really is to the point that gold does not work well, but silver works a lot better. So when we start to marry those elements, but remember, bonds in themselves, especially midterm bonds, long-term bonds, are actually right now a very bad place to be. So those are not the diversification that we need. So we move out of those, we go to other elements that are going to provide the opportunities to make sure that we are mitigating the risk correctly, but also looking for growth. So this was definitely something today that I wanted to just highlight, that there are still risks, but we still have the reasons and room. And more importantly, as the next couple weeks unfold, the momentum will be there, hopefully, to help that happen. So with that, obviously reach out as you have questions. And again, going back to stress testing of your overall portfolio, your wealth plan, please click the link below. We feel free to schedule a time to talk with us. We'll be happy to look over and discuss the opportunities that you have. Take care.